of the ETF Watch. I'm Christian Magoon with Amplify ETFs. And in this episode, we're in a period where the VIX is spiking. Are we going to see more volatility throughout the market this year? If so, we've got several solutions for you to consider. Hey, the first one that we should take a look at is our SOFR ETS, SOFR, the Amplify Samsung Secured Overnight Financing Rate ETF. This is an ETF designed to track the SOFR rate, the infamous Secured Overnight Financing Rate that many of us have heard about, the replacement for LIBOR. Let's talk a little bit about the attributes of SOFR. It's an overnight lending rate that reflects the short-term cost of borrowing money. It's published daily by the New York Fed. About $1 trillion of volume happens in this market on any given day. So this is a huge institutional market, and now we're able to provide the SOFR rate in ETF format to investors. And what this ETF seeks to do is provide the SOFR income on a monthly basis, and that's after fees and expenses. So you're actually getting what you would get if you were an institution with this ETF. I think it's very timely because many investors are looking at ultra short income options as well as cash. This could be something that complements both of those areas. With an overnight duration and a yield above 4%, we think this is an attractive combination in volatile markets. Many investors own U.S. Treasuries, and a 20-year Treasury is very common. In fact, one of the largest ETFs in the space is TLT. Amplify offers a new take on the U.S. Treasury market segment with the Amplify Bloomberg U.S. Treasury 12% Premium Income ETF. Ticker TLTP. So let's take a look inside TLTP to understand how it works. The fund's core holding is the TLT ETF, which is the 20-year U.S. Treasury ETF. Each week, the fund writes covered calls on TLT, but only enough covered calls to produce an annualized 12% option income. So essentially, that works out to about 1% option income a month. Every week thereafter, the fund simply rolls its weekly covered calls. Distributions on TLTP are each month, and they include option income as well as any underlying TLT dividends. So if you have exposure to U.S. Treasuries, especially 20-year Treasuries, take a look at TLTP, which offers increased income potential due to its option income strategy, which also could act as a hedge in case we get into rocky interest rate market environments. So consider TLTP as a complement to your existing U.S. Treasury positions. In equity market environments that experience more volatility, it's always great to own high-quality blue-chip companies. And that really brings up our next two ETFs, which is the Amplify CWP Enhanced Dividend Income ETF, DEVO, and the international version, iDevo. These are two actively managed strategies that seek to own blue-chip companies in the US in terms of DEVO and internationally in terms of iDevo. This is a high quality approach to investing in dividend paying companies that adds an option overlay to the portfolio. The managers have the ability to tactically write covered calls on these blue chip stocks. So not only do you get dividends from these companies, you also have the potential for option income. Let's take a look at iDevo because international markets have really surged this year relative to US markets. So let's take a look at iDevo's selection methodology. iDevo identifies dividend growers of ADRs in the large cap space. The manager then determines sector allocation by looking at what sectors are in favor versus out of favor relative to the indexes. Then security selection happens, about 30 to 50 securities that have been screened based on attributes including earnings, cash flow, return on equity, management track record, and market capitalization. Finally, the manager has the ability to tactically write covered calls on individual securities, not only to potentially lower the risk, but also enhance total return. So in more volatile markets, we think iDevo and DEVO could be a great addition to an equity portfolio. These are high quality names inside these ETFs, and the strategy not only harvests dividend income, but option income. And remember, as volatility rises, the potential for more option income also rises. This harnesses volatility to equity investors' advantage. Amplify has a variety of solutions in a market that seems to be more volatile of late, whether it's for ultra short income, longer term treasury duration, or even high quality covered call exposure. We have a variety of solutions that we encourage you to check out. Thanks, and see you next time.